Hey everybody, Rob Maurer here, and though we do have a relatively quiet news day today, we're going to be talking a little bit more about Tesla's production shutdown, the semiconductor situation for the broader automotive industry, some comments from Morgan Stanley's Adam Jonas on CNBC about Tesla, and then we'll wrap up the week with some news on SpaceX. Quickly checking the stock today, Tesla finished down 1% to $675.50. That compared to the Nasdaq actually with a green day, up about 0.5%. As it seemed like all eyes in the market today were on the stimulus package, the House of Representatives is scheduled to vote on that tonight. It is expected to pass. If that does happen, it will then proceed to the Senate. But there has been a bit of a hang-up on the minimum wage increase proposal included in this stimulus, as the Senate's parliamentarian, or basically the person that's responsible for making sure that everything is proceeding properly, ruled that the minimum wage increase could not be in the relief package. So Democrats are then trying to add some new language that would penalize companies for not paying their workers $15 an hour. So a bit of a mess, not something I'm trying to get into the politics of, but obviously this has the market's attention currently. All right, so first up today, checking in again on the production halt that we had talked about yesterday. Of course, Elon Musk had said that Fremont had been shut down for 2 days due to part shortages, but they had restarted on the 24th. But separately from Elon's comments, there were a couple of reports from employees in various places saying that yes, production was starting back up on the 25th, but not in a full capacity, and that some areas would still be down until March 7th. So the water cooler chat on this today is coming from Drive Tesla Canada, who tweeted earlier today, quote, "Just heard from a source at Fremont that Model 3 workers who were originally told they were off until March 7th have been told to come back this Sunday. Looks like Fremont is back up and running, like Elon Musk said." End quote. So this does kind of fall into that rumor category, but I don't have any reason to be especially skeptical of it. I think it holds just as much credibility as the other rumors that we were working on with that March 7th date. I also wouldn't take this as a sure sign of smooth sailing, full production rate for the rest of the quarter. There may still be parts supply shortages. Also, in relation to the conversation we had yesterday about the downtime for Samsung's chip fab in Texas, one of our commenters made a good point that it's not necessarily related to this because that just happened last week, and although lead times are probably very short, it might be a bit of a stretch to tie that shutdown, which started on the 17th, to Tesla shutdown, which looks like it started on the 22nd, just a few days later. I don't think it's impossible that they would have been related, but probably not as clearly linked as the presentation yesterday may have suggested. Now, I don't think that's super consequential, but if it's not related, that could mean that Tesla has some upcoming part shortages from that shutdown in Texas, but that depends on a lot of things like how much safety stock there was, when production restarts, when it is able to get to the full production rate, etc. At any rate, moving on a bit here, but staying with the semiconductor topic, we have some new information here from Reuters today. They are reporting on the impact to Hyundai, which, as we have talked about in the past, didn't seem to be overly impacted, and it looks like for now that does remain the case. Reuters reporting that, quote, "Hyundai Motor has so far avoided a chip shortage that has plagued global automakers, largely maintaining its stockpile of chips last year and even accelerating purchases towards the end, 3 people with knowledge of the matter said." End quote. As for the reason, Reuters writes that the South Korean automaker kept buying chips even as rivals cut orders to reflect diminished demand because of the pandemic. So we've talked about this line of thought before, but I think especially relevant in the context of Tesla having to then halt production there for a couple of days. Despite that, I continue to expect that the impact, if anything related to the semiconductor industry, to Tesla is small. I think Tesla, like Hyundai, would have been aggressive with their orders throughout that situation. Even with that though, Reuters does write here, quote, "If it doesn't ease soon though, the shortage could hit Hyundai too, as tight capacity on factory floors starts pressuring production of even high-tech auto chips," said 2 of the people who are familiar with the company's purchases. End quote. Additionally, Reuters says that according to an internal Hyundai document that they have seen, Hyundai expects the shortage to ease in the 3rd quarter of this year. Other automakers are still being materially impacted though here in the first half. Automotive News reporting today that Ford has extended its production cuts in Europe for an additional 5 weeks based on chip shortages. Meanwhile, the 8 governors from Michigan, Indiana, Ohio, Kentucky, Kansas, South Carolina, Alabama, and Missouri issued a joint letter to President Biden asking for assistance to urge semiconductor companies to, quote, "temporarily reallocate a modest portion of their current production to auto-grade wafer production," end quote. All right, with all that being said, I do want to now transition to talking about Adam Jonas's appearance on CNBC today, talked a bit about Tesla, but he actually summed up my thoughts very well on the chip shortage situation. Like we had talked about with Alex Potter, I'd asked him if he was getting calls from investors on Tesla and Bitcoin. He said no. Well, Jonas here today said that he's getting tons of calls from investors on chip shortages. He said what he's saying to them is, folks, we're not going to be talking about chip shortages later this year. I couldn't agree more. So I'm sure we'll have to keep talking about it at some point, and that was the most prevalent news for today. But really, long term, it's just inconsequential. As for Jonas's other comments, he's still got his $880 price target on Tesla. I saw some people saying that was a new price target increase from 810. That actually happened a few weeks back, early February, so no increase on that price target. He was also asked about Tesla and Bitcoin, and he was pretty nonchalant about it. He made the same point that I've made, that $1.5 billion might seem like a lot to put into Bitcoin, but at the end of the day, it's just 0.2% of Tesla's market cap. Next here, just a bit of interesting news coming out of a Jaguar Investor Day. Of course, we talked a week or two ago about how they intend to make the brand entirely electric in 2025. At the time, I wasn't fully certain that meant fully all electric in 2025. Well, lo and behold, despite all the headlines, it does not. In their investor deck, they share their Reimagine electrification timeline. They have 2025 marked clearly on here, and they say first new Jaguar BEV on new dedicated architecture. Then they have 2026 and they have 2030 clearly marked on here. And then they have a point in between there where they say 100% of Jaguar sales to be BEV. Now, it looks like they're probably targeting 2027 for that, but I do wonder if that was intentionally left vague. Management also said at the investor day that they'd be looking for a partner for the dedicated EV architecture. For the total company, so including Land Rover, they outlined their projected powertrain breakdown through 2029. They are betting heavily on flexible architectures, so they have two flexible architectures, one they call their modular longitudinal architecture, whatever that means, but they say it's electrified internal combustion engine and BEV propulsion flexibility. Then they have their electrified modular architecture, which they say is a BEV native architecture, but then they've got a bullet point in there that says additional electrified compact ICE, which I guess means it's an EV architecture that they also think they can shoehorn a small internal combustion engine into. Now, obviously, electrification of the Land Rover type segment is a little bit more difficult, but still a lot here to be disappointed in, especially when they're saying all electric in 2025, and yet per their own charts here, they clearly intend to sell their internal combustion sedan platform, that's the D7A in this chart, all the way until 2028. All right, lastly here, just want to wrap up with a little bit of SpaceX news, specifically on Starship serial number 10, SN10. SpaceX yesterday completed the SN10 static fire test, so just testing the engines, no flight. And now the reports today indicate that SpaceX is targeting it no earlier than this upcoming Monday, March 1st, for that SN10 test flight. According to Next Spaceflight on Twitter, they also have additional launch opportunities on March 2nd and March 3rd. Oftentimes these things do get delayed, but it'll be exciting to watch for that next week. Also something to watch for next week, Japanese entrepreneur Yusaku Maezawa, who's working with SpaceX on the Dear Moon project, which intends to take a group of 6 to 8 civilian artists on a space tourism trip around the moon on the Starship, tweeted late last night that there's a big update coming on March 2nd. So perhaps we see another passenger named or something along those lines, but we'll keep an eye out for that next week as well. But that'll wrap it up for today and for this week. As always, huge thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you next week for the Monday, March 1st episode of Tesla Daily. Thank you.